Hey guys, welcome back. Today we're going to be talking about credit scores. More importantly, how to build your credit score, things you ought to be doing. So let's go ahead and get into this because building credit can be really tricky, right? If you don't have a good credit history, you can't get a loan, a credit card, or even an apartment, right? So how are you supposed to show a history of good repayments if no one's going to give you credit in the first place, right? So there's a couple ways we can do this. A couple tools we can do to establish a good credit history. If your aim is to get a credit card, you should start with a secured credit card or a cosigned card, or you can ask to be an authorized user on someone else's card. If you want to build credit without a credit card, you might want to try like a credit building loan, a secured loan, or a cosigned loan. Right? There's also ways to use your rent, phone payments, utility payments to build your credit. Right? Some of these are free, some of these aren't free, but we're going to get into that today. All right? So let's talk about getting a secure credit card. So if you're building your credit from scratch, you're most likely going to need a secured credit card, right? A secured credit card is backed by a cash deposit that you make up front. Now, this is usually going to be your limit. So if you're going to get a card and you put a down payment of $200 deposit, your limit is going to be $200. Some companies now offer alternative credit cards that don't need a security deposit, but you'll use the card like any other credit card. You'll buy things, make a payment on or before the due date. You'll incur interest if you don't pay your balance in full. So if you have a $200 card, all right, and you spend $100 on it, you pay that $100 off and you don't incur interest, right? But if you spend $100 and you pay $50, you're going to incur interest. That's why a lot of times people tell you to pay it in full and you don't pay that interest. So you'll receive your deposit back when you close the account, right? There's regular reviews and ranks of the different best secured card options and all that stuff all over the internet, so you can go into it. And secured cards aren't meant to be used forever, right? The purpose of them is just to build your credit enough to qualify for an unsecured card, which is just a card without a deposit and with better benefits. So choose a secured card with low annual fee. Make sure it's reporting your payment data to Equifax, Experian, TransUnion, right? And it'll start building your credit. Now, the next thing we're going to talk about is getting a credit builder loan or a secured loan. Right? A credit builder loan is exactly what it sounds like. It's a loan where its sole purpose is to help you build credit. Typically, the money that you're going to borrow is held by a lender or the lender, whoever you get it from, in an account and not released to you until the loan is repaid. Right? It's basically like a forced savings account, kind of, sort of. And your payments are reported to the credit bureaus. So these loans are most often offered by credit unions or like local community banks. If you have money on deposit in a bank or credit union, ask them about a secured loan so you can build your credit. Right? With these, the collateral is money in your account or certificate of deposit. The interest rate is typically a little bit higher than the interest rate you're earning on the account, but it may be really lower than some of the other options available to you, right? Another thing you can do is use a cosigner, right? You can get a loan or an unsecured credit card if someone else signs it for you, right? But you got to be sure that you and whoever's signing with you understand that if you can't pay for it, that cosigner's on the hook for everything you don't pay, right? So if you default on something, if you have a bill due and you don't have the money to do it, the person who co-signed for you, if they don't pay that for you, it'll mess up their credit, right? So you need to make sure you have an understanding. Another thing you can do is you can become an authorized user on an account, okay? So basically, say, a parent or a sibling or even a loved one would be willing to add you to their account as an authorized user, right? So doing so adds that card's payment history to your credit history, right? So you'll want a primary user who has a long history of paying on time. Also, being added as an authorized user can reduce the amount of time it takes to generate a FICO score, right? So you don't have to use or even have the credit card at all to benefit from being an authorized user. Your name is just on the account. Like, you're good to go, right? You don't need the actual card, none of that good stuff. Um, the activities generally it's generally reported, but you'll want to make sure otherwise that your credit building efforts, aren't wasted. So make sure you're checking those reports. You should come to an agreement on whether and how you'll use the card if they let you use the card if you're an authorized user, and make sure that if you're using it, you pay back what you're spending. Right now, another thing you can do is you can get credit for the bills that you're paying. Right, there's rent reporting services that take a bill you're already paying and put it on your credit report. Right, it helps you build a positive history of on-time payments. Not every credit score takes these payments into account, but some do. And it may be just enough to get you closer to that credit rating to get that loan or to get that credit card, right? That establishes your credit history for all lenders, right? So doing this, maybe you can't get that unsecured card yet, but then you start tracking, you paying your apartment rent. And then all of a sudden that boosts your credit score 15 points, bam, you can get that unsecured card, right? And you're good to go. Like, Experian Boost offers a way to have your cell phone and your utility bills reflected in your credit report with that credit bureau. Right? Now it's only limited that's only limited to your credit report with Experian, right? And any credit scores calculated on it. Okay? The next thing we're going to talk about, practicing good habits. Building a good credit score takes time, right? It's just a whole history of your on-time payments. To have a FICO score, you need at least one account that's been open for 6 months or longer, and at least one creditor that's reporting your activity to those credit bureaus we talked about, right, within the last 6 months, right? A Vantage score from FICO's biggest competitor can be generated more quickly. Practice these good habits to build your score. Try to make your payments on time and pay at least the minimum if you can, right? Paying credit card or loan payments on time every time is the most important thing you can do to help build your score. If you can pay more than the minimum, that's also helpful to your score. If you use credit cards, keep the utilization of your credit low. The utilization is the percent of your credit limit that you're using. I would recommend staying somewhere between 20 and 30%, right? Never go above like 35%, right? And this is a combination of, like, if you have 3 cards and say they each have $1,000 limit, so you do 30% of $3,000 because it's of all your cards, right? So, 900. So, the lower your utilization, the better it is for your score, right? Avoid applying for multiple credit accounts close together because credit applications they can make a very small, drop in your score because it's a hard credit check they're doing against you when you go to apply for a card. And multiple applications can cause significant damage. So if you apply for a credit card and then maybe it drops your score 10 points, and then like a couple days later you apply for another one, drops you another 10 points, and then like a week later you apply for another one and it drops you another 10 points, you've just lost 30 points, and it might take you 4 months to get those 30 points back, and you just got rid of it in 10 days, right? Now make sure, you have multiple, of your multiple accounts, you keep them open, right? Like, never, don't just like close them. A lot of times people will close them, but that gets rid of your credit history, right? So unless you have a compelling reason to close an account, like a high annual fee or poor customer service, you should consider keeping it open. I mean, you can also explore downgrading it or transferring your credit limit to another card, but closing an account, it usually hurts your credit utilization and reduces your average account age, your credit history, right? So another thing we're going to talk about is checking your credit scores and reports. Okay, so a credit report is just a record of how you have used credit in the past. Your credit scores predict how you'll handle credit in the future. So using that information, the credit reports show you a lot about, your history and what creditors can most likely expect from you. How well you pay your credit, how much you pay on time, and of course, the better it is, the better loan you can get at a lower interest rate. Right? There's other places you can go to get free credit reports and stuff like that. But you want to monitor both to watch for errors and see your credit building efforts pay off. It's really good when you check your credit score and you're like, oh man, I went up 5 points this week, or I went up 10 points this month, or over the last 6 months I went from a say like I went from a 468 to 658. Like yeah, like that feels good. You can use educational tools like credit score simulators on different sites. Like I know NerdWallet has one, and you can see how certain financial actions affect your score, right? Like, oh, if you get a hard check against your credit, like applying for to see how big of a loan you can get for like a house for a mortgage, or you can see how these things would affect your score and how bad or how good it would be. Most of the time, every time you have a hard credit check against your credit history, it's usually going to dip your credit score a couple points, and then you make that up by on-time payments, right? So like if you got a loan for a car, the credit check might drop your score 10 points, but the fact that you're paying that loan back over 5, 6, 7 years, it might actually boost your credit score 50, 60 points over the time span of that entire loan, depending on how long it takes you to pay it back and yada yada yada. All those details, right? They all matter. So take all these things into consideration, right? The easiest thing I would say is, if you're really young, try to become an authorized user, right? On like your parents' accounts, right? That's the easiest way, because they probably have, if they have decent credit, they easily have 15, 20, 25 years of good credit history. And when you become an authorized user, it's like copy paste, right? It's like not exactly, but for the most part, right? And it helps you have that history, and you don't need to use the card. They just continue to do what they're doing, and it builds your credit for you. And this is a really good thing that a lot of parents these days are doing. They're having kids, everybody, well, not everybody, most people want to have kids, but what they're doing is when their kids are born, they get their kids, as they put their kids on their credit cards as an authorized user, and they never tell their kids about it. And so when the kid turns 18, right, they give them like a credit card, and they're like, here's your credit card for emergencies only, say $5,000 limit. And of course, the parent is on the card, so they see what their kid is spending the money on, if at all. But by the time that kid gets out of college, they're going to have a credit score of over 700 or 750, right? Like, because they've been on your credit history the whole time. So it's a very good way to set your kid up for the future, right? That would be the easiest thing for you to do to get that credit score up as quickly as possible. Another thing is, a lot of people have, not a lot of credit. It's like if you have $1,000 limit and you're using 50% of it, you have $500 in debt. If you open up a new line, it might drop your score 10 points, but now all of a sudden you have, say, another $1,000 card, you have $2,000, and you're only using 25% of it. You're below that 30% threshold, right? It's probably going to impact your score positively. So you might be, say, opening that account, the credit check was minus 10, but opening the account actually, since you're under 30% utilization, bumped you up 15. So now you're positive 5 points from where you started. Of course, you don't want to do this over and over and over. What you end up really want to do is you want to call, the credit company and be like, hey, I want to get a higher credit limit, right? So I have two $1,000 cards. I want to make both of them, say $2,500, right? Then you can use a little bit more credit, but don't go crazy, because you don't want to use credit that much unless you're paying it off. And some people will have like a $5,000, $10,000, $20,000 card, but they'll pay all their bills on it, and they won't have a debit card. And instead, what they'll do is all the money they spend on their credit card, they pay it off in full every month, right? They go out to eat, they buy groceries, they buy gas, anything that they spend their daily expenses on, it's all on their credit card. They earn a bunch of points, and then they just pay it off every month. Just boom, boom. And they do that instead of having a debit card. So there's a lot of different things you can do. Just depends on how you want to go about doing it. Just make sure you're smart about it. I hope this has been helpful for you guys. Maybe you got some good information out of it, some new information, some things you didn't know. Hopefully you guys like it. If you did, go ahead and like. If you can, go down and comment. Tell me what you liked. Tell me what you didn't like. And hopefully I'll see you guys in the next video. Until then, I'll see y'all later.